Welcome to the March Spotlight on Income Planning, brought to you by ProducersWeb.com. I'm Sarah Fletcher, and in this broadcast, we'll cover some of this topic's biggest trends and insightful research. This Spotlight on Income Planning is sponsored by Creative Marketing, Making a Difference. For more information, please visit www.creativemarketing.net. Registered investment advisory firms struggled during most of 2009, with only 5 of the top 50 increasing their total discretionary assets for the year. Despite this trend, the combined discretionary assets for the 50 largest RIAs saw an increase of 14% in the year-over-year period examined, with the figure having reached $115.7 billion on December 31st. Meanwhile, findings from the RIA database also indicate that total assets, including those not managed directly by RIAs, rose 15% to $132.7 billion. Only 51% of Americans last year had estate planning documents such as wills, trusts, or power of attorney, indicate findings from lawyer.com. This figure, which is compared with a rate of 64% in 2007, represents a decline of 13%, not surprising news considering that 71% of those surveyed say focusing on saving money is more important than the long-term planning of their estate. Meanwhile, findings indicate that 35% of Americans have wills, down from 45% in 2007, 29% have power of attorney for finances or healthcare, down from 46% in 2007, and 18% have a trust, down from 31% in 2007. More than 60% of households run the risk of being financially unprepared for retirement, according to new findings from the Center for Retirement Research at Boston College. The National Retirement Risk Index, a measurement of the number of working Americans that are at risk of being unable to maintain their standard of living in retirement, experienced a 10% rise in 2009. This is compared to an incline of just 7% during the stock market crash in 2008. According to the director of the center, quote, "Even after the bursting of the housing bubble, our research shows that home equity remains a major financial asset and can significantly impact retirement security. The impact of home equity on the percent of households that are at risk is greater than that of the recent stock market crash. How baby boomers and future generations decide to use their home equity could determine how well many fare in retirement," unquote. I'm Sarah Fletcher, and thanks for watching the Spotlight on Income Planning. To see more video spotlights on your favorite products and practices, find them on ProducersWeb.com and browse by topic.